Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for analyzing and identifying digital asset and blockchain tech opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here's some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Well, everyone, it has actually been quite a busy week in the market. There's been quite a bit of news. First, JP Morgan has officially launched their own Bitcoin ETF product this past week. Also, crypto exchange Kraken, which is the second largest, probably one of the second largest crypto exchanges in the US, they have been facing an extortion threat and also have reported a $200 million investment this past week that they received at a $13.5 billion valuation, which is actually a down round from their previous $20 billion valuation. And then yesterday, there's been rumors swirling that they are actually now refiling their S1 privately and maybe going public soon. So TBD on that. We're expecting a new draft of the Clarity Act this week, which should expand and potentially give some protections to that stablecoin yield question everybody has been wondering about. And as always, the Iran war continues to weigh on the crypto markets and every market, with no resolution in sight for now. However, as always, we are here to talk about the individual tokens. So I will get into those right now. So first up, we have Tau or Bittensor. This was definitely a sticky situation if you saw this at all this last week. So Bittensor is kind of like, you can think of like an artificial intelligence focused layer one. They essentially make training and building models kind of in a decentralized way more feasible. And it's actually very interesting design. This past week, though, they did see the departure of three of its largest projects known as subnets. So this past week, Covenant AI, which operates those three large subnets, Templar, Basilica, and Grail, announced that they were going to leave Bittensor after a dispute with one of the Bittensor co-founders over Tau emissions, part of which are to be directed to individual subnets. So to be clear, like nobody really knows what it's been a lot of mudslinging basically. But to be specific on what happened, Covenant's founder, Sam Dare, called Bittensor's governance process theater of decentralization, claiming that Bittensor co-founder Jacob Steves had unilaterally changed Tau emissions. He also alleged that Steves removed moderation abilities over its community channels, unilaterally deprecated subnet infrastructure, and even timed token sales to apply operational pressure on subnets. Steves has refuted all these claims, but it's kind of it's not done a ton to, like I said, stem the damage of Tau's token price, which has slid about 26% in the past week. Like I said, though, a lot of mudslinging, not totally sure what exactly happened here. The big problem also stems from the fact that Bittensor has an incredibly complicated system and a very complicated system where it gives out emissions to its subnets. And that has caused a lot of confusion. And it's led to, I don't know if that's probably not the reason that Covenant AI left, but it's been also really like fueling the fire for this community backlash that is also happening right now. A lot of folks are questioning, the governance structure. Is there true decentralization here, especially in a community like Bittensor, where they really do claim to have more of a Bitcoin grassroots leaning? So only time will tell. Like I said, the token price is down 26% week over week. Definitely a blow to the project for now. And we'll have to see if that manages to bounce back ever. Okay, next up, I'm going to talk about Scroll. So Scroll is a layer 2 on Ethereum. And this past, they announced yesterday that they're actually going to be undergoing some major cost reductions after their largest application departed the L2 about 2 months ago. So Neobank EtherFi, if you've heard of them, they actually migrated to the from Scroll, where they initially were, to Optimism, another layer 2 in February. And they took with them $160 million in TVL with it. Scroll reportedly actually earned about $13 million in annualized fees from EtherFi's operations on the blockchain. And supposedly this loss of income has pushed the L2 to dissolve its security council and transfer control of the network to an account managed by an internal team. Currently, Scroll is ranked number 15 in TVL of all layer twos with about now 23 million in TVL. So pretty bad decline there. Scroll at one point was really considered like the one big promising layer two for its security and privacy features. There were hundreds of millions of VC dollars poured into this project. It has really, unfortunately, performed lackluster as a result, and the loss of EtherFi is only going to, kind of cement potentially its inability to continue operating at its current levels. So, Scroll the token though, only down 4.9% for the week. We are seeing a definitely more resilient crypto market than normal. All right, next up, I'm going to talk about Dolomite and another project that is having some problems. But this past week, so Dolomite's a money market protocol. They're deployed on a few different chains, but they were saddled this past week with about $400 million of bad debt after Trump-backed project World Liberty Financial borrowed $75 million in stablecoins from Dolomite using its WLFI token as collateral. So if you're not familiar with any of these terms and you're like, what did you just say? To just explain very briefly, World Liberty Financial's token, WLFI, they used it as collateral on a Dolomite market to essentially borrow cash in exchange. However, the potential problem here is that the WLFI token is very thinly traded and may not actually be able to be liquidated to cover that $75 million that is borrowed from the protocol in the form of stablecoins. So in this case, the protocol could potentially incur what's known as bad debt, where they essentially have like debt on their books that they owe, but they can't repay. So the loan, though, it also maxed out the lending pool. No lenders can redeem their stablecoins from the pool right now. And like I said, it kind of created this potential for bad debt. There's also some additional concerns here about insider dealings because Dolomite's co-founder is also the CTO of World Liberty Financial. To make matters worse, over the weekend, Justin Sun, founder of the Tron blockchain, accused World Liberty of hiding a wallet freeze function and of freezing about $100 million worth of its WLFI tokens that were in Sun's control. The dispute, which really escalated online, is supposedly being settled in court. Like I said, definitely been a bit of a messy situation around Dolomite, World Liberty Financial. And we did see initially about a 32% decline in deposits on Dolomite following this incident, but it has since bounced back to flat. The Dolomite token itself, though, it's down 2.9% for the week. Okay, last up, I'm going to talk about Cal Protocol. So yesterday, decentralized exchange aggregator CalSwap suffered a front-end exploit after their website was hit with a DNS attack. So DNS attack, denial of service attack, is a very common attack to hit the front end of protocols with. And by doing so, again, the way you can think too of like crypto projects is that we have the smart contract layer, but to interact with it, you usually need what's called like a front end website of some sort. So that front end website was what was compromised, not the underlying contracts. So the team, though, was really quick. They warned the community about this exploit and managed to mitigate what seems to be so far no major customer losses. And also they've stated that the backend protocol and connected APIs are very secure. As an aggregator, CalSwap connects to many other DeFi protocols such as Aave, Sky, Uniswap, Curve. None of these appear to have been impacted as of now. CalSwap team has paused that backend protocol, though, as precaution. And as of now, it appears that there were no major losses, although the situation is still unfolding. Cal token has not actually reacted much. It's down about 60 basis points for the week. Seems that this one will maybe go, and this token may be going unscathed. Anyway, everyone, that's all I have for you this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.